Hey everyone, welcome to another market weekend update from Charting Star. I'm Joe. It's Sunday the 17th, and we're gonna move quickly through the DAX, the DowJones, the S&P 500, and the Nasdaq. And we're going to jump right into a 50-minute time frame chart based on the cash markets, etc. of DAX. And what you see here in blue is a so-called descending broadening wedge. It got 3 touches on that upper trend line. You need 2 touches on the lower one. And usually it's a bullish consolidation pattern, which has its first target at that high or that starting point. And then you get a statistical target, which is 83% of that greatest inner amount you have from that high to that low, which ends up to be at 13,245 and 100% target, which is that entire move of 581 points taken from that third touch, which is at 13,344. And right in between you have that 38.2 retracement from that leg down coming from 14,700 to that low we made the previous week at 12,391. So this area is very interesting if DAX continues from there to higher highs, or if this is already the end again for another draw down. And we continue with our 4-hour chart. So what we have in here, beside from these red cycle brackets, we will talk about that later on, are these 2 falling wedges. This one here, the blue one, is just an ordinary one, which has its statistical target at 13,252. So that's right in between these 2 38.2 retracements, which would be the first stronger resistance zone at DAX. And there's this other one. This one is actually a Wilbur wave pattern, which has its target line running at 13,081. So they all point to the upside, at least to that 13,100, 200, 300 area, before we actually get into stronger resistance. And having a look at these red cycle brackets, this looks like we made that low, which was a secondary low to this one, even on a weekly basis. That was actually the third leg down, and we bounced the third time up from there. And so this happened or occurred quite early. It was right at the edge of that time frame acceptance here. And because we had that strong rally into Friday, I'm pretty sure that the cycle low was made already in here. So this could cause now a rally into the end of July. The next low is due on the 28th of July, concerning these little shorter term cycles, which run usually 10 days. And once we hop into our weekly concerning the bigger cycles, what was quite interesting that last week, even that rally occurred under declining volume again. Even we had OPEX, where usually there's much more volume and volatility involved. The volume just kept declining. And concerning like the bigger term cycles, this was here the March low, and you can see here we made a low now, we have made a second low, a third low, so we have now a bottom of 3 legs down here, which is for the bulls, first of all, the bottom which needs to hold. If we go under that, I don't really want to know what's going to happen. I'm pretty sure then we will lose another 1,000 points to the downside. But concerning these cycles, not these ones here, just my primary setup, we started that cycle, that primary cycle from here, and we had a half cycle in which bottomed in week 10, and this one had a so-called left-hand transition because it couldn't get over this high over here, and it bottomed in week 18. The whole primary cycle and the second half primary cycle was in week 8, and that fits actually perfectly. into that whole setup that we bottomed on this primary cycle. And our next question is this cycle going to be bearish or bullish? Usually when they are bullish, these rallies, they last into week 8, 9, and they continue making new highs. So if, and that's my bias to be honest, if we top out within the first 5 weeks, and this was here the first week, last week was the second, that means if we now top out in the next 2 to 3 weeks, or even the next week already, which would mean that we are on the bearish side again, which means that we are going to make new lows. And this is also still my main idea in DAX, because I still have open targets on an hourly time frame and even on the daily, which are way below 12,000. I'm pretty sure we will reach that during that summer period very soon. And when we have a look and just having concerning divergences to the volatility, this is a VDAX down here on the daily time frame. This is the cetera, the DAX on the cash market. This is the RSI on the VDAX. You see we made that low in the first week of July. This was the low, the secondary low last week, and the VDAX, the VDAX actually made new highs already. So volatility picked up, but we didn't make new lows, which makes it to be a positive divergence concerning volatility, and even we made a lower RSI reading in the VDAX, which was also positive diversion that the market is going to turn around. And just having a look at the VDAX, I haven't changed that black pass. I was expecting a little spike due to the OPEX. Actually not that much, but I was expecting that spike and then another drawdown. And we have like 2 Willow Wave wedges in here, and there's a smaller one. I haven't really drawn this one, but you see that target line. This one suggested an area, target area around 27, this one here around 23. Before there should be another high spike in volatility, and even this pattern here suggested a little later on into August. So this means here that we should get another short squeeze in the index, and they flush volatility again, if this is working out for DAX. That's about DAX, and we're going to have a look. We're going to continue now with the US markets, and I was showing this sentiment from II last week, and I was going for another that they equalize or rebalance that sentiment, and it's actually going to happen. The long side is picking up, and the short side, the bearish side, is decreasing. So I'm pretty sure that will equalize, that we will see something. I was showing you that in the historical data, something like this, that we go back to these average numbers. And in order to do that, we actually need to rise. We need to rally further, even to make new highs. I don't know how much it goes up, but we had that drawdown. I think it was caused because of rebalancing for the OPEX. But I'm pretty sure that this rally hasn't finished yet. And we're going to have a look at the, I don't know what that rectangle is. No. The US pattern, this is a Nasdaq now. It's a 4-hour time frame. They basically have all the same kind of patterns. I'm pretty sure that we move up in a quite big bearish flag. And this one here is an open target around that 12,500 area. And I left these wedges in there because there might be possibility once we get up here that we decline sharply, and that we might reach that target line again. And for Nasdaq I have, and I was posting that on Friday, that symmetrical triangle. There are 2 ways how you can deal with those. If you just consider this as a symmetrical triangle and you are not considering Elliott, there's just that third touch missing on that upper trend line to have that triangle activated, and then they usually try to fake you to either side, or sometimes they just break out immediately. That's also a possibility. Elliott suggests usually, once we count that as an A, B, C, D, E, there is that third touch on the upper side missing, and then there should be another one on the downside before they break to the upside. And as you can see, that's 100% target of if you consider this also to be an ABC. And this is also the upper edge of the channel I was just showing you, and that 12,677 would be the statistical target area for that triangle. And I was showing you this chart here last week. This is based on the cash market. It's a daily chart, and I was mentioning that cup and handle, which made now another cup. And what you could also see in here, once we have that horizontal resistant line here, which is also the neckline of that pattern, once we connect these lows, it's also to be a so-called rising triangle, and which means, or which is usually a pattern which likes to break out to the upside. For this cup and handle, we have still these target at 12,880 and 13,313, and that might be a possibility to squeeze that market up to get rid of these bears, these retail bears in the sentiment. And this is actually a bigger chart for the Nasdaq on the weekly. And as you can see, the Nasdaq was the only one which didn't take out the highs from 2 weeks ago in the US market. The S&P did, I think, and the DowJones did as well. And the Nasdaq actually was suggesting of these subcycles here, a low in that week. So we actually made that. And the only problem I have with that is that this bottom occurred in week 14 from that primary cycle, which was bearish, which started here. And usually these cycles, these primary cycles, are 15 to 23 weeks for the Nasdaq. And this one was on the very, very early side. So that's why I think this low isn't it. So, and once we have a look on these, there's like a big variety here actually in this nesting area. That smaller one here and the next subcycle of that red one suggests actually low at the beginning of September. This one is the week of the 5th of September. And it might be still, and that's my main bias, that Nasdaq hasn't finished that primary cycle. That means, and it might be a possibility that Nasdaq is the only one which takes out that low compared to the S&P500 and DowJones, to take out that low the next weeks, and the other one, they don't come down as much. Just to keep that in mind for Nasdaq. And once we have a look on these daily divergences, you can see they were all positive. The RSI still is positive, the momentum. So yeah, we might see another squeeze rally into the next following weeks. So let's continue with the S&P 500, and I will leave that wedge here also on that chart. I was mentioning that blue zone many times that one needs to hold, and it got actually broken even with an hourly close, and I got kicked out of my positions here actually as well. And as I mentioned just then, we made a new low compared to this low 2 weeks ago. But I favor also now these bullish bear flags channels. So This one here has an upper target of 4029, and we even can move higher. I consider this now as an A. Here was like a complicated XWY correction within that channel, and if I'm right, there might be the C target of 4029, and we might even move higher. And I will show you another pattern with my cycles that we actually run all the way up to 4200, so that might be a possibility that we will fool the bears again and break out of this channel, and then we come down again. And this is that chart I was just talking about. We still have that bullish Wolver wave wedge in here, and that target line runs right at 4204, which is around here. And you see these little subcycles in here. Let me just zoom in, and the S&P actually came down on its midpoint, and as I mentioned, it's undershot that low here, and this actually looks like a perfect XWY, as I mentioned, and which count as a B here, which are usually quite complicated, and they are just there to kick out new bulls, which try to get into that market, and they want to trade that bigger wave. We are not sure if this one is going to be a C or a 3 to the way up. And as you can see, we hit that midpoint quite precisely, and can tell you what, as soon as we break out of that wedge, out of that line, I'm pretty sure that we move to that 4030 area quite quickly. And so this might be the first resistance, the stronger resistance we experience. So either that's it once we get up here, or they keep even they keep pushing higher to squeeze these bears out of the market. And so we might run up here, come down for that little subcycle, back to 3.9 or so, to retest these highs, and then we jump up again, and then we jump with that new subcycle beginning of August, and then there is that next severe or sharper decline into mid or end of August. And the last one we are going to have a look at is the Dow Jones. Same pattern or same idea as a Nasdaq and the S&P, that bullish flag. And here we have that 100% C target at 32,365. And as you can see, we also made a new low last week, and we kept rallying into Friday. And as I said, if they squeeze these retails out, next level would be 33,747. So if you had the balls and went long here, that is the first area to take profits, or even actually here, but you should take your main profits around here, and then it's like a 50-50 if we move up or come down straight again. That's for the Dow Jones. Do I have another one which I wanted to show? Cycle wise, no, not really. So that's about it. I actually got one more concerning these midterm seasonal patterns. This one here, if you consider now this short during the midterms, this one supposed to be our low in June. This one here suggested at end of June, and then a rally into July and a drawdown. So we might be a bit on the early side that we came down with a secondary low, and then we might move up into August again. So this might be actually the case, even what that seasonal pattern suggests. And I'm pretty sure it's the same for the S&P. Let me just check. And this is S&P 500 concerning the midterms here in blue. That's actually data from 1931 until now. And as you can see, that whole timing area between June all the way into August, September is basically just a range, and where wild swings can occur, and that's what we actually see. We see wild moves to the up and down side, and that might continue all the way into late summer before we see that final decline for new lows before we rally into the end of the year. That's what just the seasonal patterns of these midterms suggest. If it happens, we'll see. I think the likelihood is not as bad. So that's about it for my with my weekend update. I hope you liked this one. It was a bit shorter than usual, but I don't really have that much time today. So I hope you enjoyed it. Give me that thumb up, or even subscribe this channel, and I'll see you tomorrow or the next few days on Twitter for more updates during the week. All right, wish you all the best. Thanks for watching, and bye bye.